traders, welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is June 23rd, 2012. Lots to talk about, so let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. Let's kind of zoom in here and see what happened on Friday. So in the previous video, which was, well, actually yesterday's video, I said, well, most likely what will happen is after we have a big down move here, we get somewhat of a bounce, either to the 50 or 25 percentile line, and we definitely made it into the 25% line. Actually, what's interesting is we actually bounced off of this 25% Fibonacci retracement. So after we get this bounce, similarly to this big down move here, whenever you get a down move, you either get a flat day or somewhat of a small bounce, in the 25 to 50 percentile. Now, if we close if we had closed above the 50%, 50% mark of the previous day, and we actually opened or gapped down below it, then that would have gave me a neutral standpoint. Okay, it wouldn't be a reversal, but it would be a neutral standpoint. We obviously were not able to close above the 50% of the 50% level of the previous day's candle, which was Thursday. Therefore, this is just telling me that right now, as how I see the charts, is we are possibly going to consolidate to the side. So in yesterday's video, or in Thursday's video, I mentioned that one or two things are probably going to happen. And the first thing is we're going to come up, we're going to negate the Thursday's move, or we're just going to come up in the 25% or go flat and then have this consolidation period. Now, the reason why a consolidation is more likely is simply because we have this 20 moving average right under this big down move here. So we may get a pop actually into this 50 moving average. We also will see some resistance here right as when the 50 moving average comes in. So actually on Monday was a low volume day, so there's definitely a possibility that we could go a little higher on Monday. All right, so we have this resistance level here, we have this 50 moving average here. We could possibly retest this 135.44, but if we do that, then that'll give me a neutral standpoint. Okay, so right now if we get a bounce off this 50 moving average, and there's pretty good resistance point here, because we also have a pivot top here, right, just coinciding all around this area here. We may just go right into this level and then bounce down. Now, or not bounce down, but pull back. Now some may ask, well, we have the 20 moving average under here, so wouldn't that give some support? Yes, that's true, but we've already used up this 20 moving average. Just like my mathematically calculated levels, I don't like to see it being used up. I mean, it's used and abused. Once you're using and abused, then there's a possibility that we may break down. So if we consolidate sideways, so let's look at this now. We have a down move here, we consolidate sideways. The 20 moving average, say, is just right around here. We can start consolidating sideways. We have this bearish pattern here. We could potentially break down through this 20 moving average simply because we've already used up this 20 moving average 1 2 3 4 5 times around this area over here. So this, to me, in my opinion, is going to be a minor support level. Maybe intraday you can take a trade to the long side, but in all honesty, it does look like right now that we will be consolidating sideways. It's hard to, well, I cannot have a 80 to 90% percentile saying that we will be trading sideways, simply because this is just one candle. I mean, we could easily trade higher on Monday, simply because it's a lower volume day. However, but what it looks like, and normally what does happen, is just like I said in the last video, whenever you have a big down move, you have either a flat or to a minor upside move. And if you get an upside move that's above 50% of the previous day's candle, provided you open below that candle or you gap down towards the end of the day, then that would put me in a neutral standpoint, especially if we've already had this up move already. Okay, so I hope that's kind of understandable. Now, the next resistance point that we're going to run into, this is 200 moving average here. We have this green line here, which is from this pivot point here, and then this pivot top there. Okay, so that green line is going to be some pretty good support, and then we also have the Fibonacci 382 level all around this area here, around the 200 moving average. So in all honesty, what I could possibly play it on the safe side is if it gets to this gap fill here, then I may take an intraday trade, or maybe even a swing trade for a small bounce. Now, ultimately, I do have a mathematically calculated level here at 125.66, which it could possibly get to 125.66. But the contradiction here is next week. We have a normal week, but towards the end of the week next week, people are going to be taking vacation, simply because the week after that is July 4th, or the week of July 4th is probably going to be fairly low volume unless we have substantial news coming out from Europe, which is bad news, right? If we get bad news coming out from Europe, then obviously, throughout the July 4th, even on low volume, we could have a substantial sell-off. that's definitely a possibility. But history shows that around the holiday season, around the holiday times, the Feds like to prop the markets higher. So people on, that could take a holiday will spend more money, and not to mention, it's going to be lower volume, so that gives the institutions more of a chance to prop the markets higher because they got the money to do it. So essentially, we just have to read what the charts say, and right now the charts are saying that there is a possibility that we may start trading sideways and therefore come down into this 129.73 level, or around that level, 128, 129. And if we get through this level here, then ultimately I expect the 125.66 to be tested at least, or at least this double bottom here to be tested, in my opinion. Okay. Now this is a chart of the US dollar. Okay, so again, I believe I had this like this falling wedge here. Let me just kind of draw it in. Not too sure which or how I drew it the last time. We took this pivot top here and then come straight down like that. Okay, so in the previous video, I'm pretty sure I talked about this breakout of the US dollar out of this descending wedge here. And normally what you get is at least a, or probably a 50% retracement before you head higher. That's normally the case. I mean, it's not always the case. The question is, when do you get that 50% retracement? And when it does hit that 50% retracement, that's normally when I go long. If I was to trade the dollar, I probably won't trade the dollar. I normally don't trade currencies, but in normal charting, after you have a breakout, you just don't know when, but you wait for the pullback, at least a 50% pullback before you go higher. Or a lot of people also wait for a retest of the upper trend line here of the triangle. Okay. All right, so that's a US dollar. Right now, the US dollar is pulling back, and it could potentially pull back into this level right here before we get a bounce higher. Okay, so let's take a look at the UUP, which is also the US dollar, but sometimes the UUP, it's either one. Like, I mean, over here on the DX, it would have the dollar futures would have a nice support here at the 50 moving average on this pivot point, but it didn't quite get there before we got the bounce. However, let's take a look at the UUP. This is the daily chart of the UUP. It obviously shows something different. Can you guys see it? All right, I didn't save my drawings here, but if you guys can't see it, let me just draw it in here. We have this gap window here, we have this pivot point here, and then now we have this 50 moving average. Unlike the DX, the UUP will show that this provided pretty good support, and which is why we got a bounce. We went right into the 20 moving average, and it looks like that we may be actually pulling back. Now I don't see a lot of I mean, this is a doji candle, but I don't see a lot of exhaustion, or any exhaustion for that matter. So we could possibly break through this. But right now, as far as what the charts are telling me, we already got that pullback after that 20 moving average. So there is a possibility that we may continue higher and break through this 20 moving average. However, a small pullback would not be out of the question, at least into this level here. This is a nice level here that I can see here. There's a possibility, unless we already actually hit it. Well, we came pretty close to hitting this level here, so we could actually get a bounce back up on Monday, which would constitute a drop in the markets. But then how you can kind of see how the contradiction works. I mean, we have Monday, which is low volume, and normally the institutions will prop the markets higher, but yet we still have bullish readings in this market right now. Okay, so I mean, if the SPY, we kind of pull back on Monday, simply because if we do pull back on Monday and we start consolidating, like I mentioned before in the previous week, or let me show you what I mean. I mean, if you look back in some previous videos, I was talking about this move here, and then after we came down, I was like, you know what, there's a possibility. So you just keep in mind that we may start consolidating sideways, and that's exactly what we did. We came up, we started consolidating sideways. All right, so this is there's a possibility that we may actually do the same thing. We come down, we may start consolidating sideways. Now, what would happen is we get a bounce on Friday, which is what we got, and then Monday, if we get a pullback on Monday, into this 20 moving average, then this would constitute, in my opinion, a sideways trade. I mean, all you really need is 3 candles here, in my opinion, to validate a sideways consolidation like this, and then you just wait for the drop. You wait for the consolidation pattern to happen. You short it. Maybe any close below the 20 moving average would constitute a weak showing in the SPY, and then that's when I would probably take a short. But you know what? I'm actually already short in the SPY. I have not been stopped out on the SPY. I did, however, get stopped out of the AXP, which is American Express. In the previous video, I said I took half off my AXP, so I've already profited half my shares off of AXP, and I put a break-even stop on the other half so I could get greedy on AXP. Unfortunately, AXP got a little jump. Let me kind of show you there. I normally talk about stocks after I talk about the markets, but since I'm already on the subject, AXP actually bounced above the 50 percentile of the previous day's drop. Now, again, I just wanted to mention that AXP is a stock in relative strength. I mean, it is above auto moving averages. It is in an uptrend. It could be, forming a downtrend now. However, it is, it did stop me out. For a break even, so AXP is off the table, not a big deal, no sweat off my back. I've already made money off the first half, but I'm still in it on the SPY. So if the SPY continues up on Monday, then it might stop me out for a break even, but it doesn't really matter because I can just reshort the SPY at a better level. Okay. All right, so this is the VIX. This is a daily chart of the VIX. So actually, let me just give you a rundown since it's a weekly video. I mean, we had this rising wedge over here. We kind of broke down. We retested. We did not confirm. Remember, we needed to confirm, but because we didn't confirm, we just broke down again. We actually pierced this 1949 support level. Remember, and the support levels, especially my mathematically calculated levels, after the first hit or something that's pretty close to it, then I don't rely on this level anymore. However, what I do rely on is it being now a resistance point, and which is what we got here on this candle, and we pretty much got that on this candle here right into the 50 moving average, and then obviously on Friday we got it again at this 1949 level over here, or roughly this is kind of like an average level here. So what happened was the VIX went up and then it kind of just bled off, and right now it's just, this is basically telling me right now the VIX has no fear. I mean, the markets have no fear because the VIX is the fear indicator, or the fear index, and when you see the VIX in low prices like this, it just tells me there's no fear in the markets, and without the fear, you're not going to get the sell off. As soon as you get the fear in the markets, the VIX is going to start flying high. I mean, it's below auto moving averages right now. It's in pretty good I mean, the VIX could potentially come all the way down here, to be honest. But once the VIX comes into this level here, then I'm pretty much sure that fear is going to jump back into the markets, and the VIX is going to spike again, possibly into this 1949 level, and then we're going to see a sharp sell-off in the markets. Okay, so let's talk about some stocks here. The first thing I want to talk about is obviously the king of technology is Apple. All right, so Apple is just holding this 590 36 level here. It is still it's definitely still a stock in relative strength. If you think about it, Apple's been holding up while the market's been coming down. So there is still a possibility that this 607.62 level could get hit. So I do have an alert here at 603. Let me just make it maybe 605 here. We reach the 605 level, then I may consider taking a short on Apple. One thing I did notice here though is if you get a line here and you draw it straight up, we actually have this somewhat of a triangle. Okay, now the thing is, if we break down from this triangle here, then I'm thinking that we're gonna have, obviously we're gonna have intraday supports, and we're gonna have a pretty good support level here, and then obviously a pretty strong support level here. Let me just take a look here. Yeah, I think this support level is actually going to be a really pretty powerful support level around this area here. So if we break down from this rising rising trend line here, if we break down, actually close below, and possibly another close below that. In fact, let me kind of just zoom in here. We also have this two moving averages here. So actually, if we yeah, you know what, to be honest, if we close below these two moving averages, instead of this upper trend line, just to be on the safer side, then I may actually consider taking a short or buying some puts on Apple all the way down to maybe to be cautious, or maybe at a 549 level. That's a $20 drop. Okay, so just want to keep an eye on that. Again, and it would be well, it is a stock in relative strength, so you just have to be aware of that. Where's the 200 moving average? All the way down there. So yeah, the stock is still above auto moving averages. So it is a stock that's pretty powerful, and you don't really want to short the strong stocks. I mean, because the weaker stocks are gonna take a bigger hit when the market goes down, and if the markets go up, then the weaker stocks aren't gonna run you dry when you're short the stock. But and when the markets go up, like say it goes up on Monday, then there's a potential that Apple might get a spike back into this 590 level and possibly break it and go into the 607.62. So that's just something you want to keep an eye on. And if you trade strong stocks on the short side, then you just have to be careful. It's kind of like the trend is your friend. You want to go with the trend. If you go against the trend, then it's a counter trend trade, and it's the risk factor is higher. It's the same thing with stocks that are in relative strength. I mean, the risk factor is higher if you're going to short a strong stock, or if you go long a weak stock. That's just the way the game is. And if you follow those rules, in my opinion, it'll keep you on the safer side. Okay. All right, this is daily chart of Walmart. Now, Walmart is an interesting one. You see how the 67.21 level is actually kind of holding. The 67.70 and the 67.21 level is actually doing a pretty good job. We also have this, 20 moving average coming up here, very shortly. To be honest, the markets were up, a whole buck yesterday. I mean, on Friday. I think it only traded 130 million shares, which is low volume, and that's just what I'm talking about. I mean, Fridays normally has no low volume, and then when you have low volume, you just have to expect an upside bias, right? However, the markets were up. The SPY was up at least, and Walmart actually took a hit at 40%. Which, I mean, 40 cent, a 40 cent hit. It's not at all a big hit, but if you think about it, it's still within. Walmart is still in a pretty good uptrend, and it's still above all these moving averages here. I mean, it's way above all the moving averages here. I mean, we could, tag this 20 moving average, and then there's a possibility we bounce all the way up to this $70.56 level. So, you just have to be careful with strong stocks. Again, if you're going to short strong stocks, and you just have to be very, very careful. Yes, I can put my foot in my mouth at times because I did take a short at Walmart at this price here, and I actually sold it over here for a short-term swing trade. But you know what? All the indicators are pointing that to take the short there. I had nothing here to tell me to take the short here except for a double top. To me, this double top was just a little bit too weak for me. The time span wasn't long enough. When you're playing with human emotion, I mean, if the double top was over here and then people are suffering, 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 then more than likely they'll want to break even. But if you have people buying long over here, they're just suffering a few days, right? Chances are that they're not gonna sell off break even. But if you take a look at it, that's exactly what it did for Walmart. Again, I just want to put the odds in my favor, so I take the best trades that I can find before I take the trade. Okay, so basically Walmart, what I see is this up move here from down here to down up here, and then we're just trading sideways here, consolidating, and we could possibly once we hit this 20 moving average, get into this $70.56 level. It's kind of contradictory, obviously, because if the markets continue down, then I would have to expect that Walmart eventually is going to break down, possibly breaking down from this 20 moving average, and your next target is going to be all the way over here, or maybe even the 50 moving average, if it lands around here, this 65.47 level up here. If Walmart takes a beating when the markets come down, if the markets come down and 50 moving average moves into the 65.47 level, then I'll definitely take a long position on Walmart, depending on the pattern, obviously. But that's pretty much what I see on the charts for Walmart. All right, this is a chart of Oracle. Oracle looks pretty good. I mean, my calculated levels work pretty well on Oracle. I really like the Oracle's play. This $25.56 level actually held up really well. Before, it was the low for Oracle, short-term low, I should say. It came up, went into this 27.46 level. I mean, you guys can preview the older videos if you want, and if you can see this 25.56 cent level I created on this day over here, but I did not take the long trade over here because I actually missed it. My alerting software wasn't working correctly. Well, I missed the bounce because if once a move is made, that once this move was made, I don't chase. So you wait for a consolidation period before you go higher again. But there's this 20 moving average here, so I didn't take that trade, but it busted through that 20 moving average because Oracle is pretty strong at the time. Now I have another level here at 27.46 that I calculated at this time here. So Oracle came down, went back up, bounced up, and then broke through. Did not confirm above the 50, right? And then came back down right back into the 20. My next level for Oracle was 2904, as I mentioned in two videos ago, and I really liked this level because it really was a pretty strong level. Oracle still has a chance of getting into this level here. There is still definitely a possibility. However, until it gets there, I'm probably not going to take a short. Again, there's other stocks that are better out there. Right now, Oracle is not one of those stocks in relative strength because it's still under its 200 moving average. But it looks like Oracle could get a bounce after this 2904. So it's something that I'm gonna look at. I mean, I can't guarantee anything. So if the markets do rally, through this week, then these are the kind of stocks I'm gonna be watching, like the Apple and the Oracle, to see if it can meet these prices here. And if until it does, I'm just not gonna take the short. And if it never gets there, then I never take the short, but I also never lose money. Okay, so that's how I normally play this. All right, this is a chart of MSI, which is Motorola Incorporated. All right, so I have this trend line over here, and then we have this 200 moving average, right? And it's offering this pretty good support on this 200 moving average. Oracle, I'm sorry, not Oracle. Motorola looks like has this is pretty good strength over here. I mean, we could potentially get another bounce. I do have a level here at $49.80. I really doubt it gets there, but that's pretty much going to be like the maximum that it could probably get there. I mean, we have a lot of resistance around this area over here. So in my opinion, if we can close below, to be honest, if we can close, let's see, below this bottom trend line here, which is what interconnects all the way up there, then my target price would be around this area here, which is about $46. So you probably get a dollar beating. And if it can actually close below here, if the markets are super weak and Motorola comes and close below there, then the next target I have is all the way down here for a longer midterm, all the way down to $44. But it's just something that I want to keep an eye on. It's not a chart that I really like or I think looks really good. There's other charts that are better, but it's just something that I'm going to keep my eye on and watch for pattern. Okay. All right, this is a daily chart of Intel. I know I mentioned in the video, Intel had a level here at $27.88. It didn't quite get there, unfortunately. The high of that Wednesday was 27.75. All right, so that was not too much far, a few cents off of the calculated level. Now, what I want to watch for Intel is it's between these two moving averages here. If we get some sort of consolidation period and this 50 moving average is kind of leaning over there, then I may actually consider a short on Intel. But again, I'm just gonna have to wait for a pattern. To be honest, give it a few more days for this pattern to play out, and then I'll be a lot more interested in Intel. Okay. Okay, this is a chart of EOG. Okay, I kind of like this chart in some ways. I mean, we have a Fibonacci 618 that we got to bounce off on Monday. Okay, and a 618 is a pretty powerful Fibonacci retracement line. We had this huge down move. Now, what I want to see in EOG, this is what I want to see in EOG. You see this 20 moving average over here? Let me kind of zoom in slightly. You see this 20 moving average right here? As the 20 moving average comes down, it's not going to be a straight line. And then price, say we start consolidating, and this is assuming we consolidate into the 20 moving average. Even though it's above the 618, I'll probably still take a short on EOG all the way down to this 82.59 calculated level here, which is a $5 drop. Okay, so that's something I want to keep an eye on. Obviously, we're gonna need more days to validate this, and that's provided the market, goes sideways. I mean, EOG no, is looks like it's following the markets, but it is definitely a stock that I want to see. Or I want to trade to a short side because, like I said, strong stocks, it's hard to short, but the weak stocks is easier to short. So what I want to see is because the stock is below all the moving averages, we also have these two moving averages that are about to overlap each other, and that to me could tell me that EOG could bleed out as early as Monday or Tuesday. Okay, so but I probably won't take a short trade until I see some sort of pattern first, right? Once I see that pattern, then I'll probably take a EOG trade. We actually might have some support over here as well. Yeah, that's going to be a pretty good support in my opinion. But yeah, so that's the chart of EOG. Now this is a chart of COG. Okay, so kind of just wanted to mention, like, for example, this is a stock in relative strength. I mean, the stock was up $1.56. And it pretty much negated Thursday's candle. This does not, to me, is a strong reversal. I mean, we do have a top here. We kind of came down, and then now it looks like we have a reversal pattern. We have these moving averages coming up. We're still above all three moving averages. I mean, this is a stock in relative strength. So, which tells me that there's a possibility we can get into these two levels here, which is a 38.45 calculated level. Which in that case, I may take a small short. There's a possibility. So that's something I want to keep an eye on for EOG. I'm sorry, COG. All right, this is a chart of Caterpillar. Caterpillar is another stock in relative weakness. This 88.64 calculated level looks like it held up pretty good. Hit it once, hit it twice, hit it three times. It hits it so much. I mean, I would figure, it would have been really good. I would have really liked it if it could have gotten all the way up to this 96.15 level. But Caterpillar is just a weak stock right now. Unless we get some crazy news. On Caterpillar, this stock to me looks weak. I mean, we have this down move and we're basically just trading sideways here, kind of like a bearish flag pattern. So, in all honesty, let me just draw a line over here. If we break down from this, actually, we kind of just did break down. So, we could actually break down even lower. So this is the thing. I mean, if Caterpillar can catch a bid back up into this 88.64. Now I know I said that the levels are only like the first hits of my level, or if it's using abuse like it is now, there's a possibility it can break through, upside and downside. But if you just look at Caterpillar right now, it's pretty darn weak in my opinion. So if it can get back up into this 88.64 level, I may actually take a short trade on Caterpillar. Either that, or if I wanted to play it a little bit safer, we already did break down, but we did not confirm. So if we do confirm, let me just show you what I mean. If we didn't close below the low of this candle here, but if we do close the low below this low of that candle, then from 84 all the way down to 82 would be a possibility. Okay, then we'll run into a double bottom there. But if the markets bleed out, then that double bottom ain't gonna do so well, or ain't gonna do very good, and we're gonna have we could possibly retest the lows of 2010. Okay, so that's just another stock that we want to keep an eye on. All right, this is a chart of Amazon. Okay, so in the previous videos, you can see I drew this trend line over here. So this trend line looked like it's holding up, but just keep in mind that these two moving averages are right under it. We're also on the Fibonacci 618 Fibonacci retracement there. I'm waiting till Amazon gets to this 231.61 before I initiate a short. Amazon is a stock in relative strength, so there is a possibility that we could get there. If we break out of this trend line over here, then we could actually potentially go all the way up to this 240.70 level. I mean, if you want to be safe, shorting a stock as strong as Amazon, then this 240 level would be a pretty good level in my opinion. Okay, and of course, that's if we even get there, and of course we have this 197.73 level, which I'm just waiting for it to get to, because I know this is going to be a good long opportunity. Okay. All right, this is the daily chart of ABX, which is a gold a miner, I think. Anyways, I had this line over here, which was, let me move this out of the way. 3690. Okay, so I had that move at 3690. Let me just delete this Fibonacci retracement. Actually, just let me load the drawings over here. Okay, so that's that level, the 3690 level. I'm still waiting for that to hit. It looks like it wants to get there. You see how patience is key, right? We went right into this Fibonacci 618 level, which is a pretty key level. I should have caught this because we had this pivot point here and the 618. So I should have actually went long on that point, right? But you just wait. You have this down move. You consolidate, just like I said. This was a bit of a longer consolidation period, but then we consolidated, and now ABX is breaking down. So if ABX can get all the way into this level here, then I may actually initiate a long play. It'll be a short-term long play, but I think there's going to be pretty good support around this area, and then ultimately the double bottom over here. Okay, that's ABX. And that's pretty much all I have for you. So basically, right now, the charts are just showing some bearish. Well, I take that back. The charts are actually. Let me switch to the SPY here. All right, so right now the SPY is showing, possible start of a bearish consolidation pattern here before we head lower, or we are actually getting a bounce off the 20 moving average, in which case we're going to retest this 135.44 level. Okay, so we just have to play it day by day. Again, if we get 2 days to the sideways like this, I mean, it could be less. Like I said in the other video, sometimes you only get one candle before you start breaking down again. That's a possibility. The chances of that happening is less, but I have seen it. Okay, so it can happen. You can get one pullback candle before it comes straight down, but normally I like to see at least 3 candles before I would consider this a consolidation pattern. And then we are in this 20 moving average, so we're going to need to consolidate before it can get down. But again, fear is the strongest emotion out of the 3 fears, which is greed, hope, and fear. Fear is the strongest. So if we get some fear back in the markets and the VIX pop, then it's all over. I mean, the fat lady song, and it'll be it. So we just have to watch this very carefully. We are still in a confirmed downtrend. We have a high right here, and then we have a lower high right here, and then we have a lower high right here. We have a low, right, and we have a lower low, and then we have another lower low. So the trend has not changed yet, in my opinion. Okay, so we just have to play it. You want to be with the trend because the trend is your friend, and you probably heard that a million times from reading books and whatever. But it's honestly true, and if you don't listen to these basic rules, then it just makes it a little bit harder to trade, and that's obviously just my opinion. So we'll see what happens on Monday, and then throughout the rest of the week, I'll probably get out of my short positions on around the 4th of July period, because I'm not actually short, I actually buy puts. Okay, so if I buy puts, my theta is against me, and obviously Vega is going to eat me alive during that week, because if we have just low volume that week, I mean, we could have high volume due to fear, but if we do have low volume that week, and that's normally the consensus for holiday areas, then Vega's just gonna eat me alive. And along, if I try to sit through that whole week, then not only Vega will eat me alive, but Theta is gonna eat me alive, and it's not gonna be until the week after, unless Vega picks up, which is the volatility. Then I'll actually be losing money even if the markets do pull back, right? So options are a little bit more complicated than actually shorting the stock, but it does give you a lot more leverage. So I just wanted to put that out there. Okay, so again, this is not a recommendation. This is just my opinion. And if you guys are actually making money, or you guys just like watching my video, I just have one request. I'm never gonna ask money from you guys. Well, I don't think, not for now at least. But if you could just do me a favor, if you are making money, kind of just donate money, to a charity or whoever. I mean, if you have people standing on the side of the road just looking for money for donations to help homeless people or whatever the case may be, even if you throw 1 cent in there, I don't care. I mean, that's all I ask. I mean, just anything, just kind of give back. I mean, if you're gonna make money, just kind of give back. Or if you don't want to give money because you love your money too much, then try to do a good deed. And do a random act of kindness somewhere. Walk a old lady across the street or something. Just something good. Out of these videos, if you like these videos, just do one thing good, and that's all I'll ask. And that's pretty much it. Enjoy the rest of your weekend. This is your 7 minute market update. God bless to you all. God bless to you for the rest of the week. Good luck for all of next week and your whole trading career. I appreciate you guys watching these videos, and I hope to see you in the next one.